Well, I'm joined by the ever lively Bright Khumalo. He's from Vestact. Thanks for joining us as always, sir.
Yeah, that's a great intro. Thank you.
You're welcome. Now, global markets are generally up following the US positive close on Friday, and the Aussie is no exception. What do you see as the key drivers this week, although we do see that Europe is a little bit in weak territory today?
Well, it's hard to say why other markets are up, right? But if you look at our local market, it's the constituents in the top 40, which accounts about 80% of all movements basically in the market. In terms of volume and actual returns, we see that Naspers plays a very big role. Tencent, the company that Naspers owns a third of in China, is up about 45% year to date, and Naspers as a result is up 42% as well, following their investment in China. So most of it, and we know that Naspers contributes about 19% of the Swiss index, which is why probably our market is up a lot this year. And in 3 months, we're up about 4.5%. It's very good.
Now, that's great. Naspers is doing well because of its holding in Tencent and so on and so forth.
Correct.
But, what about when things actually reverse? I know that a lot of fund managers like yourselves make sure that they have a little bit of Naspers in their kitty because, it makes sense to, because they're a bit of a winner right now. But because they're so heavily weighted on the index, surely that's also dangerous when the market starts reversing.
Well, the thing is, when let's say Naspers stalls and, the other businesses in the index start growing, because the index is constituted by market capitalization, which is basically the number of shares in the company and the share price, it will stabilize and the markets might continue going up even though Naspers isn't doing so well. Okay. It's just right now where we are today because everybody else hasn't done so well compared to Naspers. Naspers occupies, the biggest space.
Understood.
Yeah.
And then let's talk about oil. OPEC is meeting on Thursday, and it's hoping that it may be able to come to a decision on its production curb, that they may extend it into next year by about 9 months. There's talk that they'll make a decision on that and even extend the cuts, maybe to 2 million barrels. I don't know. What do you think? Do you think that's going to make a difference, given that we have the US guys in play as well?
Well, the thing is, from what I'm hearing from you, it's actually good news for the small guy who operates in the same oil industry. You're saying the OPEC guys, which basically account for most of the production in terms of volumes, if they hold their production, it just means that the smaller guys actually get to benefit from the price. But that's also, a two-edged sword there, because if you think about it, your fate lies in the hands of OPEC, which basically are the ones who are manipulating somewhat the price of oil. They're artificially keeping it high, whereas they should be letting it free float like everything else in the free markets. So I don't know, guys like Sasol and other companies that operate in that oil and gas sector, they're going to be affected by this a lot, especially when some of the guys say, now we want to come back into the action, want to produce more and sell more of this oil, because we can't do this anymore, because you can only keep prices artificially at a certain level for so long if you have an oligopoly or a monopoly or whatever. But once too many players come in to share the spoils, it gets very high. It gets very hard, to keep those prices artificially low.
You touched on Sasol. Sasol suffered an explosion at its joint venture oil refinery with Total today. It's still a developing story. We don't know exactly what's transpired, whether there have been any injuries and so on. But how has the market reacted to that? Have you seen any impact on the share price at all?
We haven't seen any movement in the share price, which probably tells us maybe it's not a big thing. Hopefully no one got hurt. And again, Sasol, it's another company we choose to stay away from at Vestact as an investment, because mostly it's in the hands of OPEC, and not being able to control your own selling price or selling point, for that matter, is a very big problem for us.
But then somebody could argue the converse, that actually if OPEC does achieve its goal of elevating oil prices by curbing output further, then Sasol immediately benefits because
in the interim, yes, correct. But if you look at the current oil rig counts, we've had an 18-week streak where oil rigs basically have been increasing for straight 18 weeks, which is telling you that the smaller guys are coming into play and and taking the spoils from the table. I mean, this is easy arbitrage for these guys that already have the facilities to produce this oil. All you have to do is just pump more oil.
And then come Thursday, we have our Reserve Bank making a decision on interest rates. Inflation data also coming out on Wednesday. What's your expectation? And do you think that Lesedi Kganyago can really raise rates in an economic environment that's as bad as this?
So yeah, prior to the cabinet reshuffle, we all expected that, rates in South Africa from, in a long time, they might go down. But, well, we had the cabinet reshuffle, everything is history now. That's not going to happen. And inflation, looking at the inflation numbers, we're sitting at about 6.1%. It's outside, well, slightly outside of that 4% to 6% band, meaning they're not going to lower the interest rate, basically. And we've seen also when you look at the inflation numbers, your staples, they're not inflationary. So there's less inflation on that side, meaning basically they're not going to hike rates either. So it's most likely that they're going to keep them sort of stagnant or where they are today. We
wait and see.
Correct.
Unfortunately, we've run out of time. There was so much more to ask you. That was Bright Khumalo. He's a portfolio manager at Vestact. And after a short break...